Roundtable presented by Fremont Bank. I'm Jason Brooks, KCBS Radio business reporter, and today's event is coming to you live on KCBSradio.com and KCBS Radio's Facebook and Twitter pages. We've got a great show for you today and a wonderful panel of guests to help answer your questions on small business loans, loan forgiveness, PPP tax implications, and simply operating in the age of COVID-19. And I want to remind you that we're taking your questions live during the event today. Just email them to us at smallbusiness@kcbsradio.com. I'd like to introduce our panel of guests right now. Don Merrick, Senior Vice President of Commercial Banking Executive at Fremont Bank. Don's team of relationship managers is in charge of $1.7 billion portfolio of commercial, SBA, construction, and commercial real estate loans. Fremont Bank has 21 branches from Carmel to San Francisco. Sarah Razavi, CEO at Working Solutions, joins us. It's a nonprofit community development financial institution that supports small businesses here in the Bay Area. And Frank Balistreri, audit and consulting partner at Sensibus San Filippo, specializing in serving private and public clients in the retail, consumer products, manufacturing, distribution, energy, and alternative energy industries. I want to thank all of our guests for joining us here on KCBS Radio and our Small Business Roundtable. And again, a reminder that we're taking your questions live during the event. Just email them to us at smallbusiness@kcbsradio.com. I want to start off with you, Don, and talking about some of the new things that we're having to deal with in this age now of forgiveness when it comes to PPP. It's been a very complex and confusing program for many people out there in the small business world. What are we looking at right now as we enter this new phase of the program?
Well, Jason, like everything having to do with PPP, it's been pretty much ready, fire, aim. We are basically watching Congress and SBA make up this program as they go along. And the forgiveness cycle is really part and parcel to all of that we've seen. Right now we have our forgiveness, what we're calling a forgiveness portal open. So we're taking our forgiveness applications at Fremont Bank through a web portal where our clients upload their information, and then we review the applications and make a decision. Basically, lenders have 60 days to make a decision. I don't know what other banks are running. We're running about 30 days. I think the key thing for most people or businesses that are applying for forgiveness right now, you just got to really be buttoned up and have all your information ready to roll.
And is that something that you've had to deal with, in that a lot of small businesses perhaps have not been as prepared as they could be? And how big of an impediment is that for them in not only getting the loans and then perhaps getting the forgiveness that they want?
Yeah, it's we haven't seen too many issues yet, but we are seeing a few situations where because of the complexity of the rules, it's hard to track. So, for example, you might have a company or a business person who owns multiple companies. That's pretty common. Somebody has a small business, maybe they have a gym or a couple of gyms, and those gyms are each under a different LLC. You got to apply for a PPP loan for each of those separate businesses. And then when it's time for forgiveness, when you're looking back at how you spent that money, you got to make sure that you spend the money that was given to that specific business on that business. So just because you might have ABC gym and then XYZ gym, and they're all feeding up to the same owner, you can't spend the PPP dollars from one gym on payroll of the other gym. So those are some of the things that we're running into that are the kind of pitfalls for clients.
I want to touch on some of the tax implications from this, because this perhaps may be the most confusing realm for businesses dealing with PP right now. And I want to bring in Frank Balistreri to get a better idea. Will the forgiveness of the loans, increase taxable income in 2020 when the proceeds are received and the expenses are incurred, or in 2021 when the borrower receives confirmation that their loan is forgiven? Frank, do we have any good answers to that right now?
Yeah, Jason, we've got a pretty good idea of what's going to happen here. So Originally, when the PPP program was pushed out, they said it would not be considered a taxable item. So the loan forgiveness was not going to be taxable. And then the IRS issued Notice 2020-32, which basically said the expenses that are forgiven. So let's take payroll, for example. All of those payroll expenses are now not going to be deductible. And this was something that the AICPA, the American Institute of Certified Public Accountants, was going to fight early on, and now with everything else going on, I don't really see that happening. So it will be considered taxable to the business in 2020 when they receive the loan, because you're not going to be able to deduct those expenses on your 2020 tax return. And to make matters a little more complicated, if you're a company that actually has to publish your financial statements to give to a bank or to give to investors, we're now looking at a potential issue with the period in which you could recognize forgiveness for your financial statements versus your tax return. So we may have some timing differences which are going to further complicate things there.
Frank, if you deduct the expenses, what happens when the loan is forgiven?
That would not have an impact at that point in time. It would basically flip back out. So when the loan, it's not necessarily the forgiveness. So they said that's a non-taxable transaction. It's the expenses that aren't deductible. So that will all fall into 2020 from a tax perspective. All
right. Thank you for that clarification. Want to talk about some of the other alternatives to PP that do exist out there for small businesses. And Sarah, I want to start with you because you deal with so many small businesses here in the Bay Area, and many of them have struggled. They're the high touch businesses like salons and gyms. Where are they able to find funding to keep their businesses running if PPP was not an option for them?
Sure. Thank you so much. And thank you to everybody who's listening. We know so many businesses have been impacted shockwave after shockwave and are still bouncing back and doing their best. So we are grateful to be a resource to many of those businesses. We encourage folks to find one entity that you feel comfortable to be the place that you get more information from, whether it's your local SBDCs, another local organization, or even the radio, wherever it is, but don't be overwhelmed. There are lots of resources, and it's not incumbent on you to just know everything. That said, the PPP got a lot of press, and it continues to get a lot of press. But the SBA actually has some other great tools in its toolbox. One of them is the EIDL loan. So the economic injury disaster loans, these are made available anytime there is a disaster, and this was the pandemic was considered a disaster very early on, and the EIDLs were actually rolled out earlier than the PPP, and they still continue to be available. In addition to the EIDL loans, if you're an existing borrower, and if your lender is an SBA lender, then you were probably part of a debt relief program where the SBA provided, paid forward 6 months of principal and interest. Now that program is expiring. Actually, it's expiring in just a few days, 9/27. We've been a huge advocate for if there's a possibility to extend that program. It's been a great relief to us as a lender, whereas SBA micro lender. But it's also just been a huge support to the portfolio that's funded through that. The great piece about that work also is that in addition to those who are already existing SBA clients or SBA funded loans, that anybody that's been funded through the end of September, again, September 27th is the deadline, they get another extension on their payments. These were not talked about as much. Great efforts by the administration. And I just think by the SBA, I just think it's something for folks to know about. In addition to those two federal programs, actually the three federal programs with PPP, there are also grants available. Hopefully small businesses have been hearing about some grants. Facebook had come out very early on, but locally, City of Oakland has done great work, City of San Francisco as well. And right now, through the CARES Act, lots of local municipalities are going to have access to CARES dollars to deploy grant capital. So we urge you to go to our website or any source that you feel comfortable getting your information to find out about grant programs that you may qualify for. Right now on our website, I know there's some amazing philanthropy-based programs, so private dollars, and I urge you to have a look.
Thank you, Sarah. And I want to remind everybody you're watching the KCBS Radio Small Business Roundtable presented by Fremont Bank, and we're taking your questions live here throughout the program. Just email them to us at smallbusiness@kcbsradio.com. Don, I want to bring you back in. This is an environment where there are two extremes. Many businesses continue to struggle due to their inability to operate at full capacity, while other so-called essential businesses are growing. What can both do right now in order to improve their prospects during this very difficult time?
Yeah, when I think about COVID-19 and this pandemic, and comparing it to other types of natural disasters, I would say that this pandemic is more like a tornado than a tsunami. A tsunami kind of wipes out everything in its path all at once, whereas a tornado touches down here and there in different places, and your house can be completely intact, but you walk out your front door and your next door neighbor's house is destroyed. And we're seeing that same thing with businesses. Certainly clients of ours that are in the essential services, whether that might be medical professionals or contractors who are working on essential projects, many of them are doing great. Dentists suffered for April, May, and most of June because they were shut down. But when they reopen, they're finding that they're having some of their best months ever. From a lending perspective, there's a lot of great opportunities out there. So first off, what's pretty amazing over the last several months is that banks have become replete with deposits. So if you look at the stats, I think as of the end of the second quarter, there were $2 trillion in additional deposits in banks since the pandemic came out. So really, banks have all this extra liquidity, and they're looking for opportunities to lend. On the flip side, banks are going to be very conservative. So for example, we've dialed back the loan to value for a commercial office building. So if you needed to have a 65% LTV, now you maybe need a 60%, or a stronger debt service coverage. So in some respects, maybe fewer projects might qualify. For those businesses that are maybe suffering, there are great opportunities in addition to what Sarah was talking about, which is the SBA program, where you get your principal and interest forgiven for 6 months. Most banks have been given some regulatory relief to be able to offer some sort of payment deferrals, interest only, other kinds of modifications, stretching out amortizations. There's a lot that we can do to reduce your payments and help businesses out.
Don, if there's a piece of advice you could give to small businesses when dealing with their banks, if they are struggling right now, what would it be?
Thanks, Jason. It really comes down to communication. First off, if you are maybe not experiencing a hardship yet, make sure that you know who your banker is. Many people who bank at some of the larger banks don't even talk to somebody until there's an issue. Reach out and understand who your banker is before there's an issue. Those of you that might bank at a community bank, you probably already know several people at your bank, and you already have a good relationship. And I think that's super important. Be honest. When there is an issue with your business, go ahead and come out with that earlier rather than later. And then just be really buttoned up with all your information. Make sure that you have your tax returns. If you haven't already filed, file right away. A deadline's coming up pretty quick anyway. but have your operating statements, your personal financial statement, all that information ready to roll, because that's going to be the basis upon which a bank's going to make a decision. Also, just one last thing, Jason, I'd say to business owners out there, take some time to be strategic. Start thinking through for your business, what is the COVID impact? Pretend as if, and this may not be pretend, this may be the reality, that COVID's going to be impacting our economy for another 12 months, maybe 15 months through the end of 2021. And so take the time to put together a forecast or a pro forma on what your business looks like. Take the time to come up with alternative strategies and tactics for your business, because those are things that when you talk to your banker, you'll demonstrate that you're thinking proactively and you've got a plan in place.
And for those just joining us right now, you are watching KCBS Radio Small Business Roundtable presented by Fremont Bank, and we're taking your questions live during the event. Just email them to us at smallbusiness@kcbsradio.com. Frank, I want to bring you in too on this, as Don was just talking about coming up with a plan going forward. From the tax side of things, how do small businesses approach life going forward, given all of the uncertainty that we've seen this year? And how do they handle this better than what they've done before?
Yeah, I think I want to echo what Don said. Right now, cash is definitely king. And so trying to manage your cash flow on more of a short-term basis, as opposed to looking out over the next year, maybe you want to look out over the next month, the next quarter, and get your hands around that. If you're experiencing a loss in 2020, even with adding back the expenses that you're not going to be able to deduct, there are some strategies to be able to take those losses and file your tax return early in 2021 and then take those losses back and get some money back from the IRS. So that's probably one of the best things that you can do right now. But cash is absolutely king. If you've got lines of credit, I would draw on them. Don also mentioned, perhaps pivoting your business, and that's critical in this environment. We don't know how long we're going to be in it, but we do know that businesses that don't try to change and adjust the way they're operating will not survive. Like, think of some of the restaurants that are out there that maybe aren't doing takeout business right now. It's going to be very difficult for them to stay alive and to open up. So you've got to come up with new ways of trying to push your products out and engage with the public.
Good advice, Frank. And I want to bring Sarah back in. Micro lending has obviously risen in popularity in recent years. Sarah, are you seeing more demand yourself from Bay Area firms in 2020 for your assistance?
Yeah, thanks. We actually have. We saw a huge increase, almost 500% in inquiries at the onset. And I think probably Don and other lenders had similar levels of inquiry. How many of those turned to actual loans? I'm actually impressed, as always, with our business owners for not jumping deep when there's so much uncertainty. There's pause, there's reflection. We are seeing a slowdown in some of our, just as we go through our review process, we're seeing some of our borrowers, potential borrowers, really be extremely thoughtful, even though we're talking about $5,000, $15,000, $20,000. Our maximum at Working Solutions is $5,000 to $50,000, and we focus on new and early stage businesses. So to piggyback on one of the questions you'd asked earlier, from one of the other speakers, there are lots of new businesses we are seeing. And there's also businesses who have pivoted. Have they been able to bring in the same revenues as January 2020? No, many haven't. We certainly are seeing logistics-based companies and online-based companies, clothing wear, especially leisure wear, started to see lots of increase in that. But our restaurants who've been able to pivot, maybe doing more takeout, changing their menu slightly, we're still seeing folks struggling to meet the same numbers as they did before. But the ability to cut back, to preserve cash as much as possible, to be thoughtful about minimizing your outflows, and to also reach out and collaborate with another business that may be able to subsidize some of the work you used to do and carry some of the burden, and in fact some of the, if you can't hold on to that particular employee, maybe another partner can. So we're seeing lots of creativity out there. We are seeing an increase in requests. We welcome it, but also a lot of thoughtfulness about making sure, even though the interest rates are very favorable, very good, there's so much uncertainty that people are taking their time.
Certainly. Collaboration and consideration, two things that we need very much these days, especially in 2020. And Sarah just mentioned the interest rate environment. This has been a big story in 2020. The Fed cut its benchmark rate down to a range of 0 to a quarter point. We've never seen rates this low before. Don, how big of an impact is this on businesses right now dealing with everything in 2020?
Well, overall, it's a very positive impact, because if you if a business has a variable rate loan with no floor, then they're watching their interest rates go down, their payments go down. And that's fantastic. There were a lot of borrowers who maybe a year ago or 2 years ago thought, hey, interest rates are low. I'm going to go ahead and lock in a long-term interest rate on my loan. And so they did a 10-year rate. And boy, a year ago, 4.75% interest rate seemed like super low, and why not lock that in for 10 years? But now you're seeing interest rates, 75 or 100 basis points below that. My advice is for businesses to not be tempted to necessarily go with a long-term fixed rate right now. I know you look at it and you feel like we're at historic lows, which we are, but when you lock yourself in, you usually also are signing up for a prepayment penalty, other restrictions on the loan. And if you go shorter term, you're that much in a better place to be able to pivot, as Frank said. If your business changes, if you need to tap into more equity in your owner-occupied building, if you decide that maybe you want to sell the building that you're in, the prepayment penalty is one of those things that surprises borrowers. They forget that they have it, and when you're paying sometimes 5, 6, 7%, especially if you have something that's called a yield maintenance prepay, it could be kind of a blow when it comes time to refinance. So yeah, stick with shorter term. That gives you the flexibility that you need, especially during these tough times where so much is in question.
Don, one final question that was just sent in before we go on interest rates. Because rates are so low, a good time to consolidate debt right now?
Yeah, absolutely. And that goes for both business as well as mortgage. Fremont Bank has a large mortgage operations group here, and we're as busy as we've ever been because you're seeing historic lows on your home loan. So great opportunity to maybe take some cash out on your home and use that, to pay down debt on your business. Certainly, same thing on the business side. There's opportunities if you have multiple loans to consolidate those, maybe into an SBA loan, some other longer term amortizing loan, so that you can be disciplined with making your payments going forward.
Excellent. On that note, we will wrap up our small business roundtable today. Obviously, a lot for everyone to consider when it comes to the PPP program, loans, forgiveness, a lot going on right now, and a lot of wonderful answers from our guests. I want to thank all of you for joining us here on the Small Business Roundtable presented by Fremont Bank. Don Merrick, Senior Vice President at Fremont Bank, Sarah Razavi, CEO at Working Solutions, and also Frank Balistreri, Audit and Consulting Partner at Sensiba San Filippo. Thank you all for joining us here on the Small Business Roundtable. I want to thank all of our listeners and viewers for watching us here on KCBSradio.com and also on KCBS Radio. We'll have more for you on all of these particular topics in the future. Thank you very much for joining us. I'm Jason Brooks. Have a great day.